Black Bull Markets here. Welcome to another market update before the market opens on the 25th of March. Key chart we'll be looking at this week is the key one that we were looking at last week, and that's the euro dollar. We saw a 200-point range move in the dollar last week, and that was started off with the Fed's decision to keep rates on hold and to decide not to raise any more for the rest of the year. And off the back of that, you saw sharp dollar weakness, which was then retraced over the next trading day. And during the course of Friday's trading day, PMI data that came out from both France and Germany took it down below the 114 mark, and you had a sharp move to the downside, pushing euro all the way down to the 112.75 mark. And off the back of that, we're now looking for future direction on which way to travel. And what's interesting is, from a technical point of view, if we draw a fib in from this low to this high, the pair did test a 61.8% retracement level from the bottom here, and if you look at that low, that comes in around the 111.70 mark. So if you are bearish on this cross, a break of the 112.79 again could see you travel lower into this space here, which would be extremely bearish for the euro dollar for levels not seen since earlier on this month. Following that, if we do continue to get a move to the upside, look out for this 50-day moving average mark here, marked around the 133.62 mark for a bullish move to the upside. Let's see if we can draw another fib in to get a better idea of this market here. Let's take this high and this low, take it down to a lower time frame, I would say. Get a bit more of an in-depth look, and you can currently see we're trading in between the 0 and the 23.6% retracement line here from the swing high to swing low. If we take the swing low to swing high, which is another interesting outlook, again currently in that zone. So again, bulls this week could be looking to target back again at that 113.90 level, what the area marked here, that's shaded, which is above the 50-day moving average. Right now we are operating below the 50-day moving average, and that is concurrent on higher time frames as well. So keep your eyes on the euro dollar. Currently looking for future direction. We do have US GDP data on later on this week, and any future developments in the Brexit arena could also dictate the future path of this cross. Moving on, I want to show you guys the dollar yen. So as you can see, this downtrend has been pretty persistent over the last week, and was a pretty heavy move over the course of Thursday and Friday's trading session, following a drop post the Fed meeting, turning dovish, and that twist from the Fed really pushing the really looking to push the dollar yen lower. The yen a lot more sensitive to these news releases, and possibly seen as a safe haven move from the weaker dollar and from the macroeconomic risks from Brexit. Also, a lot of traders looking to flock in the Japanese yen, and the choppy movements not rare at all, and we could potentially see that continue. If we look on a daily chart here, that low around the 109.59 mark marks this consolidation area here. As you can see, if we take these wicks and we bring it back up to the close of last week's candle, really a move breaking this to the downside. Could see your pair move back to the 108.50 mark around that level. So there is possible space to move into this area here which is another 50 points lower. And if you approach this space, then again, you've really, if we're looking on a weekly chart, you've really got space to move all the way into this downside area here, following a break of that 108.50 support mark down into this zone here, 107, 108, potential moves down to that area. So keep your eyes on the dollar yen. This downtrend could possibly continue. We've been operating below the 50-day moving average, which is a key indicator here for this chart especially. And again, negative sentiment generally helps traders to buy up the yen. And the pair, like I said, is trading below that 50-day moving average, and that 109.50 mark is really the next level of support on the dollar yen to watch. So keep your eyes on that. Possibly staying bearish on the dollar yen. A lot of sentiment is on the bearish side there. Moving on quickly to the Aussie dollar, again flirting with this 70-cent mark, which we haven't really broken through and stayed through. However, again, it is extremely sensitive, the Aussie, following a lot of the poor economic data coming from Australia, and more recently the lower the poor employment data result that we saw on Thursday about new job creation, and the house price index falling 2.4% as well. The RBA it's kept rates on hold at a record low of 1.5% for over 2 years now, and is probably closer than ever to a cut than a hike for its next meeting. So slowing global growth is really taking a toll on that economy, and the dovish central bank twists are seen as really no new news, and the trade war as well as Brexit, all of these things weighing in on Aussie bears, who are staying bearish the Aussie dollar. So this bearish stance continues, and if you look on the weekly time frame, it really puts it into perspective in terms of how bearish we are, or we have been, for over the last 12 to 16 months, ever since we fell below this 50-day around the 77-cent mark. So really keep your eyes on the Aussie. If we do break this 70-cent mark, which is seen as a critical support level in the upcoming days, we could see a test all the way down to the 68.20 mark. So that entire area would really open up following a break of the 70-cent mark, and resistance is the same again for me around this 71-cent mark. So look out for both of those regions as we trade within this zone here. Let's see if we can give it another color. That's the zone we're currently trading in, and a break above or a break below could signal a move either to the upside or the downside. So the Aussie is a key pair to watch out. Those are the pairs really looking at this week. And if you do have any questions about trading or about the charts we've been speaking out, please do let us know. Like, subscribe, comment. It really helps us. We hope you enjoyed this video. Keep your eyes on the dollar crosses this week, as well as gold, which has also been a key mover as of last week. And a lot of levels could break this week following in as we approach the second quarter really of 2019. And it proves to be FX market volatility, the headline of the story. And we wish you all the best of luck with your trading as well. Take care.